Good morning, everyone. Today is Thursday, the 23rd of January. Hopefully everyone survived the snowstorm that we had and is keeping warm in this this Arctic temperature that we're experiencing. But once again, I thank you all for joining in. As you know, every Thursday at 9:30 we have our webinars, and as long as we still have things to talk about and there still are questions, I'm going to be holding them consistently until you tell me to stop. So keep the questions coming, and hopefully we're going to all get through this together. As always, if you have questions, we do have an open forum segment in the weekly webinars. You can either ask questions by raising your little hand icon on the right of your screen in your toolbar, or you can type in a question and we'll answer those questions as they come in. So I thought that it was important to kind of review some of the issues because they're still ongoing issues, and you know, not everyone joins in every week, so you may have missed some information, and again, I thought it was important to kind of do a quick review. The first issue is really children under the age of 19 for parents of parents that make up to 314% of the federal poverty level. Many have experience going on to the federally facilitated marketplace, the FFM, and making applications for their family. And what happens with the children under 19, if those parents are up to 314% of the FPL, those children are automatically taken off of the enrollment and encouraged to go to CHIP or to Medicaid. A lot of questions come in because it's not really an automated system. There is an icon on the FFM that says to send for Medicaid or CHIP determination, but there seems to be, you know, one of the many disconnects in the parents actually receiving that information. And what I've been advising my agent partners is, if you know that a child is being referred to a subsidized CHIP program, first of all, they cannot receive a subsidy on the exchange. That's the law. But don't wait for them to contact you. Go directly to that Compass site, and you can Google Compass PA, and you'll see the Compass site in which you can enroll the children into a subsidized CHIP program, or make application online, or find the numbers for the Department of Public Welfare or the CHIP program so that they can call, or parents can call and enroll their children directly without waiting. You know, I can't even guess at the number of people that are assuming that their children are covered and didn't really pay attention to the number of enrollees that actually went through on the FFM, but I'm sure we'll hear about that as we proceed through this healthcare reform platform. Another issue is, and this is still ongoing, children 19 up to age 26 are eligible in the law to stay on their parents' plan, even if they file their own taxes, even if they don't live with them, even if they're not full-time students, and even if they're married. Also, even if they're offered employer coverage. But the system, the FFM system in and of itself, is still not recognizing these children as eligible dependents on their parents' plan. I'm really frustrated with this because, you know, I guess in the list of the fixes for the FFM, this is not high on the priority list, but to everyone that is enrolling these families, it's a huge issue, because these children 19 to 26 have to go basically create their own account and make application separate from their parents. And that's not really conducive to getting good coverage, because as a family, the out-of-pocket maximum is $12,700, but if they're split into several different plans, then those out-of-pockets could exceed the $12,700. So again, not a perfect situation, but at this point there's no fix except to apply off exchange. Had another issue which was kind of interesting. One of my agent partners called into the health insurance marketplace with his client. She's a single mother of about 30 with a newborn, and they would not allow her to make application. Subsequently, she's at about 196% of the FPL, so clearly within the guidelines of subsidies. But the health insurance marketplace worker and the supervisor at the health insurance marketplace told the agent and the client that all single mothers have to first be turned down by Medicaid in order to receive a subsidy. Well, I checked again this morning with the health insurance marketplace. That's not the case. But if you hear any anomalies such as that, please let me know, because and not only let me know, but let me know the person that you talked to or the application ID, any pertinent information, so we can really get to the core of who is giving this false information. So again, that's single mothers from 100 to 400% of the FPL are subsidy eligible, so there shouldn't have been any conflict. Speaking of conflict, many of you have been asking how to cancel plans or change plans. And it's kind of a ping pong game, because if an application generates through the federally facilitated marketplace, any cancellation or changing of plans has to go through the federally facilitated marketplace. However, what I was told this morning from the health insurance marketplace is if the policy is already active, so for instance, 1/1 effective dates, assuming that the clients have paid, if they are active and want to terminate their plan, it's kind of a two-pronged approach. You not only have to contact the insurer and let them know that they are canceling, but they also have to call the FFM and let them know they're canceling. So, that's the workaround at this point. Changing plans, there is a section if they have enrolled on the FFM in which you can go on and look at your current plans and change plans or actually remove the app. So, there are so many different scenarios out there. I would just say if you're running into issues with cancellations or changing plans for applications generated through the FFM, call me or call your case manager, and we'll try to help you as much as we can. The next issue is cutoff dates. 1/15 was the cutoff for a 2/1 effective date. So as of 2/16, we've been working on 3/1 effective dates, and the cutoff for 3/1 effective dates is February 15th. So just keep those dates in mind. And we actually, for off-exchange plans, we just received notification from Blue Cross of Northeastern PA that they will allow for 3/1 effective dates for apps submitted up to February 25th. So, it's like a revolving time frame. So if in doubt, again, contact your case manager just to verify. But at this point, the 15th seems to be the magic date for on exchange. I've been getting a lot of questions too, and I think it will be helpful to kind of go through this exercise on the Kaiser calculator and how that relates to healthcare.gov. So I wanted to just bring up some information. Let's just, for instance, enter a person in Lehigh County, family of 5, making $45,000 a year. Let me make sure my figures are going to be right here. And we'll just keep it at 3 children. Submit. Okay, so this is based on a family in Lehigh County making $45,000 a year, or estimating $45,000 a year in 2014. Employer coverage is not available, and just the parameters for their ages and then the number of children. This particular family is showing at 163% of the federal poverty level. Now keep in mind, anyone between 100 and 250% are not only eligible for premium subsidies, also known as the advanced premium tax credit, but they're also eligible for cost-sharing subsidies. And the reason I'm showing you this calculator is because the only way to determine what level of cost-sharing subsidy they're eligible for is to go down here into their out-of-pocket costs. And there's a percentage right here, and it varies. There are 3 possibilities. There's a 73%, there's an 87%, and there's a 94%. And the reason this number is important is because when you do go to healthcare.gov and you type in the census information, we're going to mimic what we put into the Kaiser Family Foundation. Bear with me. Employer coverage is not available. 45,000. Check if you can get lower costs. When you go in to actually review the summary of benefits of coverage, you're going to need to know that percentage, because when you click on the summary of benefits of coverage, you're going to see, you're actually, specifically with Highmark, you're going to be redirected to all of their SBCs. And you'll see in the silver categories and different plans the percentages that we just talked about. So for that particular person, you're going to want to pull up the SBC relative to the 87%, which was shown in the Kaiser Family Foundation. You know, again, the next highest level is 94, and the level below is 93. And what it does is it shows you, my apologies, it shows you how this $1,500 plan is altered to allow not for a silver 70% level of generosity, but it's altered to create an 87% level of generosity. So you see this $1,500 deductible is reduced to $500. Out of pocket is $1,000 for in-network. So, you know, it does alter the plans significantly, but again, the only way to really pick that appropriate SBC is to know that percentage. So I thought it was important to show you that. Hopefully that answered some questions for all of you as well. I wanted to also talk a little bit about, you know, I don't know if you've been watching the news, but all along they've been saying that the estimated amount of employees or people that are currently insured under their employer group plans that will be losing coverage is as much as 50 to 100 million people. So obviously that's a huge amount of people coming into the individual market. And when you have your small or large group clients, you know, I would say that you need to start the conversation out with basically 4 valid choices. And URL is going to be investing in a program that's going to actually do some of these calculations for you. But the conversations with your groups should not only include what their PPACA coverage group model would be upon their renewal. I mean, you have to show them all the options, but you should also be talking about defined contributions, that model. Another option is, a self-funded model, or having that employer dissolve group coverage and go to the individual exchange. And additionally offer, some voluntary or gap sort of program. So, there really are 4 options, and from all of my conversations with my group health agent partners, I mean, this is what we've been hearing, and this is what groups are wanting to see when you come and visit them. Again, dissolving their group coverage, what are their options within the PPACA group model, what is a defined contribution model, and is self-funding right for me? So, those are the 4 options, and for various reasons, they work better for different groups, and each group, as you know, is so individualized. But again, if you are not proactive in that conversation, somebody else will be, and I would just encourage you to start those conversations with your groups. So we're going to go now into submitted questions. Before I do that, though, I just wanted to remind everyone that, we, of course, have these weekly webinars in the Health Plan Options Division, but every other Tuesday at 11:30 Eastern Standard Time, the Life Markets Division, Steve Clemens and his team put on a Life Markets webinar, and it's not geared toward product. It's really geared toward sales strategies. And I think that, for many of us that look at the commissions and what they are now on the underage market, certainly expanding your product offerings is something that would definitely benefit your bottom line. And it's really a no-pressure sort of sales strategy approach. And I would encourage you to look on our homepage and register for one of Steve's webinars, because I think you'll find them very helpful. And he's not paying me for the commercial. I just thought it would be helpful for you to know. So submitted questions. Jay actually submitted a whole slew of questions, and I'm going to kind of go through all of them. A lot of them are geared towards what the rate increases are going to be in the 1st of April, 2014. And it's really, and he's specific to Highmark Central. And, it really depends. All carriers had to file their rates for 2014 by actually May of 2013. They had to file them. So there's not really going to be significant rate increases come April, but in 2015, pardon me, who knows? Who knows what the rates are going to be? Every carrier that wants to have an increase above 10% has to get approval and show proof that the rates that they're filing are warranted. They have to file them with HHS for anything above 10%. So, there's a couple schools of thought. Would a carrier submit for a higher increase than 10%? Possibly. The loss ratios and the risk corridors affiliated with who is all enrolling may change the whole landscape in 2015. It's really just too early to tell. And, of course, as soon as I hear anything, I'd be happy to pass any information on. But at this point, it's anyone's guess. I'm of two thoughts. I'm not sure that it's going to be pretty, but I do know that the carriers want participation, so they're going to try to keep rates as competitive as possible. Another question is, what is my opinion of the overall life expectancy of the individual health insurance agent/broker? And should we expect to become a thing of the past? I would say that, if anything, because of the government trying to simplify things, as typical with the government simplifying things, they just confuse things even more. So agents are much more needed than they ever have been, in my opinion. So I think with everybody coming into the system and everybody having questions, certainly the life expectancy from my perspective is looking pretty darn good, you know, even better than it has in the past, in my opinion. There's another question specific to Health America One products, and will they become Aetna products? And you know, that I'm not sure of. I know that for this year, of course, Health America is no longer working with general agencies. It's a direct contract. But for this year, Health America and Aetna are in two specific areas. They don't cross over each other on the individual health side. What happens in 15, I anticipate that it will probably be one product, an Aetna-type product with Health America possibly influences in the product. You know, and again, this is all conjecture, but and speculation. But I think that it will probably be an Aetna product in 2015. I don't know what will happen to the current Health America One product, if they're going to be forced into Aetna paper. Again, it's too early to tell. I can tell you that we are starting a huge project and contacting all of our agents that have Health America One products that are coming up for renewal in 2014, supplying a contact or your client list and you know, other options for them, because if you're not contacting your Health America One clients, they're going to be auto-enrolled into a bronze HSA program and start being billed. If they decide they want to go with a Highmark plan, a NEPA plan, or any other plan, they actually have to terminate the coverage with Health America One when they rewrite other coverage. So we're gonna, your case managers are going to be in touch with you on that project, but keep watching on that. So those are all the questions from Jay. Tom submitted a question saying that he had a client apply for coverage, for family coverage through Geisinger, and when they got their cards, there was nothing for the 12-year-old child. So it appears they're being referred to CHIP. Absolutely, you know, we go back up here to this, the first bullet point, and that's why they're being referred to CHIP. But, you know, this just brings up a valid point in that I'm not sure how many people that have enrolled themselves on the FFM are aware that their children are actually not covered under their plan, you know, have really checked out the number of enrollees on that plan. So I'm sure we'll hear more about this as we get closer to the close of the FFM. Another question was submitted by Margie regarding small business tax credits. And this is really something that is something that you as agents should know, but you should really not be calculating any of this yourself. It is a tax accountant functionality, but in order to claim the credit, there is a form that needs to be completed by that small business employer, and they have to file it with their taxes. They have to enroll in a SHOP plan. So if you do have a small group that meets the parameters, then you would just notify John Real when you are submitting a group for a quote that they want a SHOP group quote. But to be eligible for the subsidy, the small business tax credit, you have to cover at least 50% of the cost of the single-only premium. You have to have fewer than 25 full-time equivalents. And the employees have to have an average wage of less than $50,000. So, you know, again, it's a small segment of the population, but I would not get too far into the weeds, Margie, with recommending or calculating for your clients, because you would certainly never want to give them that information. And those are all of the submitted questions that I have. I'm going to go back to the submitted questions that we have through the webinar. And let me just grab these real quick. All right, so it looks like we have quite a few. Pam says that she has a client that did the marketplace and asked for a Capital Blue Cross dental plan. She was a 1-1 and still hasn't received anything for the dental. And she wants to know, can we call, and if so, where do we call? Pam, I would call Elise, who is your case manager, and she can check on that with you or for you. She would shoot her an email with a client's name and social, and we'll check directly with Capital to see what's going on with that dental. Michael asks the question, to qualify for a subsidy, do they count adjusted gross income or gross income? Michael, it's actually modified adjusted gross income. So, and that is estimated 2014 modified adjusted gross income. Dennis asks the question, when you are done with the webinar, can you show the beginning of the Kaiser site and show how to get the subsidy section of the site? Yes, I will. And Michael asks, if a family receives a subsidy and or reduced costs, does that count against their estates upon death? I don't know the answer to that. That's a good question. It is an advanced premium tax credit, so it is specific to health insurance premium. So I'm not sure. I am going to have to check on that, Michael. I just don't know the answer to that. And Dennis says, can you explain AmeriHealth Tier 1 and Tier 2, the basic difference? And we don't offer AmeriHealth. So Dennis, let me give you a call because I can ask you more specific questions and hopefully answer your question. Typically a Tier 1 and Tier 2 in all of the plans that I've seen relate to networks. You know, the Tier 1 would be the higher level of benefits provided to your insured by using Tier 1 providers versus Tier 2. So that's my assumption. But again, I'll give you a call and let you know. Looks like, oh wait, Sean says, can you go over the single mother bullet point again? And yes, basically, Sean, what I said was one of my agent partners called into the health insurance marketplace yesterday, and he was told that even though she was at 196% of the FPL, that all single mothers had to be first rejected through Medicaid in order to get a subsidy. That's not the case, but I wanted to at least make you aware of the situation so that if you come across anything like that, that you let me know, not only that it's occurring, but all the details, the date that the call was made or the date that they logged into the FFM and their application ID, you know, who they talked to if they did call in, and the, you know, the insured's information. But at this point, a single mother between 100 and 400% can get that subsidy the same as anybody else. Okay, that looks like all of the submitted questions. I'm going to go back through the Kaiser Family Foundation. As you can see from this Kaiser Family Foundation subsidy calculator, you can enter a specific state, zip code, county. They want income in 2014. You can either enter it as a dollar amount or the percentage of FPL. For this particular example, we put in a family of 5 at $45,000, 2 adults, age 30, with 3 or more children, and then you hit the submit button. This is their percentage of the federal poverty level, so you know that anyone between 100 and 400% of the FPL qualifies for a subsidy, an advanced premium tax credit, which is premium subsidy, premium assistance. Anyone from 100 to 250% of the FPL also qualifies for a cost-sharing subsidy, which reduces their deductibles and their total out-of-pocket costs. And this is the section where you see out-of-pocket costs that it tells you that you are guaranteed access to a silver plan with an actuarial value of 87%. Now again, there are 3 levels. There's a 73%, an 87%, and a 94%. And the reason I put that example up is because of the SBCs that you, like the full summary of benefits of coverage that you would collect through, through the Highmark portal. And you can see these percentages based on the plan and the percentage of cost-sharing subsidy. And you'll see there's a variety of them in all of their plans. So I hope that helps. If anyone has additional questions, you can certainly reach out to me. If you don't know my number by now, it is 800-926-8875. I'm at extension 113. Your case managers can also assist. And, thanks again for joining in. Next webinar is next Thursday on the 30th of January, same time, 9:30. So thank you again for your participation, and I hope you have a great rest of the week and a great weekend. Bye-bye.